So welcome everybody to our quarterly investment briefing for quarter three in this sunny afternoon in Bristol. I'm beaming to you from my office, sadly not from the engine shed today, but very pleased to have you all with us for this third event in 2020 and our third year, in fact, in running these events to bring together the community to talk about investment in the West of England, both in terms of what's going on and what we ought to know about if we're working in this particular area. My name is Bryony Phillips and I am Scale-Up Lead at Rocket Makers, as well as spending a day a week working with TechSpark on a programme that we've put together, as you can see, with a real range of different sponsors called the Investment Activator Programme. So between us, we recognised that we wanted to do something to really well, I describe it as oil the wheels of the investment ecosystem for the West of England to increase the amount of investment flowing into companies here, but also to support those companies more effectively. So really pleased to bring this event to you this afternoon on the theme of people-powered investment. And I'll talk a little bit more about what that means in just a few moments. So a couple of housekeeping things before we get started. I won't be tweeting personally this afternoon, but you're very welcome to. My multitasking powers don't stretch that far. So our hashtag is QI briefing as always. So do feel free if there's interesting nuggets that you want to share with others, then please do make the most of that. I don't think I need to mention fire escapes or toilets today. Hopefully you know enough about those wherever you are in the world. And so we shall move swiftly on to just remind ourselves what the quarterly investment briefing is all about. So as I said, we're bringing together a community of investors and those people who work with investors or are enabling investment activity. And by that, I mean people who are perhaps advising on investment transactions, or those people who are running co-working spaces or bringing together innovators and entrepreneurs. So a real range of people, but all with a main focus on networking, sharing and learning related to that topic of equity investment in companies. So the second reason, or the second important principle that we have here is making sure that we're bringing to you informative and fact-based and regionally relevant content, which is largely on me to bring together some interesting speakers, but also obviously slight emphasis on our speakers to make sure that they're able to make the most of that too and deliver that for us. And then finally, that we really focus on the opportunity to learn as well as the opportunity to share. And in that vein, today, what I've decided to do is to spend half of the session focused on content and half of the session focused on an opportunity for networking. So that means that you can really spend time getting to know the other people in this community, as well as hearing from those who I've selected to speak with us today. So the agenda looks a little like this. I'm going to spend a little time welcoming you to the event and providing a little scene setting, explaining a bit more about our theme. And then we have two different speakers, in fact, three today. So we're going to hear from Jenny Tooth and Irene Graham, particularly focused around their work on the Creative Scale-Up programme, which has been funded by DCMS and is being run in our region by the West of England Combined Authority. We're then going to hear from Charles Fallon, who is working for SI Partners. In fact, he was one of the co-founders of SI Partners, and he's a partner there, as well as being the global client lead. So we'll hear a little more from him. I'm interested to get his perspective because they work particularly with creative and technology clients around the world, and because he is in himself an investor as well. So a couple of different things that he'll be able to bring to the session today. Then I'll be talking through some data from our data partners, Bowhurst, and I'll be sharing with you some information about those who are raising investment at the moment. So some exciting news coming there with nearly 30 companies sharing their one-page summaries with us today. Don't worry, I won't go through all 30 of them in detail. I'll give you a headline and you'll be able to check out their one-pages after the event. And then, as I say, the second part of the event focused on networking. So this platform, Hopin, I don't know whether you've used it before, but there is a networking function, as you can see from the slightly ironic handshaking icon on the left-hand side. That's where I would invite you to click a little later if you haven't already tried it before we started. And that will set you up with random 4-minute conversations with people selected at random from the audience, so a chance to get to know who's here. So I thought I'd start with a couple of pieces of positive news, which are just headlines that are relevant locally in the investment scene. So firstly, you may have heard already that My Life Digital were acquired by the Inc. & Co. collective. So My Life Digital was registered in 2014 as a company, and particularly delivers or has delivered data collection and analysis tools, which my description sounds far more generic than the work that they actually do, which has some really interesting implications around GDPR and all sorts of other things. So some interesting news for them. And then the second acquisition news that came out just a month ago relates to TechModal, whose HQ is based in Queen Square in Bristol. So they were registered originally as a company back in 2005, and they primarily offer technology and consultancy services for the MOD as their main client. They've also done some really interesting stuff around the innovation scene, so actually helping to incubate and fund some local startups to help them to access that market, that set of potential clients. So some great friends there at TechModal who are now acquired, as I say, by BAE Systems. In other good news, we saw in quarter 3, so the quarter that I've just completed, according to my kind of, what would you call it, the kind of standard calendar, January to December, we've seen 16 companies raise in the last quarter, just over £8 million between them. And who are they? As I mentioned, our friends at Bowhurst give me the inside track on who's been raising over the last quarter. And as you can see, there are 16 companies. So this is significantly less than the previous quarter. We were at 27 the quarter before. So 16 companies who've raised in Q3. And as you can see a real range there of different types of business, not least Boundless, the activated nut and seed snack producer. So those of you who know me well will know I have a secret tendency towards nutritional therapy and how food can look after us and make us feel better. And Boundless are a great example of that. So the activated nuts they offer were back to the tune of £1 million as reported in the Business Leader magazine. And that was by their existing angel investors and some new high net worth individuals as well. Other people I can mention on here who've disclosed information about their investment, Fresh Range actually raised £750,000 on Cedars. And Next Green Car there actually raised, in fact, they've sold a majority stake in their business. They were originally registered back in 2006, and they've just sold a majority stake to Good Energy. So you can see that there's some smaller investments that have happened, so I tend to line them up for you in order of size. So Gvolution was the largest investment that happened in the last quarter, all the way down to Sonorex at the other end. But some good news there, nonetheless. And then the third aspect of positivity that I wanted to share with you this afternoon is this great news, which is that there are some funds flowing locally at the moment as well for companies who are in need. So I thought I'd just mention these very briefly, because I know so many of you are either investing in companies that might be able to benefit from these, or you are advising them. And so if you don't already know about these opportunities, then I encourage you to look them up in a little more detail. So both WECA and QIB are offering innovation funds, one business focused, one more digital. WECA's the deadline is in fact tomorrow, so rather pressing, but they're just looking for expressions of interest. And then you've got a little longer to look at the QIB. That is the second round of their Digital Innovation Fund. Then third up on my list, the COVID-19 business support, which is being delivered by Business West, backed by WECA. And so that's offering £1,000 to £3,000 grants to support companies to access professional services support, essentially. And then finally, Trading Better Online for those companies who want to improve their online presence. Through TechSpark, WECA have backed them to provide some support which enables companies to access consultancy support for up to 4 days. So that might be SEO or perhaps developing your website. So if you know of anybody who might benefit from those, then do please signpost them. I'll include the information in the newsletter that'll go out after this event, probably on Monday. So that brings us neatly to our actual theme for the session today, people-powered investment. And so I've just tried to distill that a little bit. It was a theme that I came up with Nick Sturge when I worked at the Engine Shed a few years ago, when we first founded these quarterly investment briefings. And essentially what we mean by it is what it says on the tin, investment wouldn't happen if it weren't for the people that really facilitate it. So is that the founding team and how diverse that group is, or perhaps the executive team for a slightly larger and later stage company? Is it actually the cultural co-founders, to borrow a phrase from my friend Reid Hoffman? I wish he was my friend, but indeed he suggests that the first 100 employees are in fact the cultural co-founders for a company, and so perhaps those are the people that are going to drive whether or not an investment will be successful in many ways. And then on the other side, you've got the advisors and the non-exec directors, those people who are providing professional services and enabling the investment T's and C's to be signed, and the investors themselves. So as I say, investment isn't going to happen without the people to power it. So actually the implications of who those people are and how diverse they are is really important. And so that's what I've decided to just talk briefly about before I bring our first speakers onto the stage, is in fact an element of this. So this time last year, I talked about the diversity of the founding teams of companies within the West of England region. And I did a little analysis and shared some data and some insights, and we kind of mused over the idea of whether there was correlation or in fact more some kind of indications happening yet in the data. So this time round, this year, I've decided to focus on the funds themselves and the degree to which they are actually interested in diversity. And I share with you a report which came out just in July, so relatively recently this year, from Project Sage. So this is a really interesting piece of writing which has happened for the third time. So it's originally started back in 2017. And the main author, Suzanne Beagle, is actually the founder of the Gender Smart Investing Summit, as well as being the founder of Catalyst at Large, who were one of the main proponents of this report. So gender lens investing, and we'll talk a bit more about what that means, is a relatively new term which was just coined and really emerged about 10 years ago. And so they have been reviewing the funds who are focused on investing with a gender lens since over the last 3 years, since 2017. So the top 6 insights that they've shared through this report this time round. And they've looked, essentially the piece of work they did, I think the 2 writers were based in the US and the UK, but they were looking globally, but they suggest there might be a geographic bias because of obviously the location of those authors. And essentially what they did was to review and then to reach out to a large number of funds to really understand what's going on and how many of them are looking through a gender lens. So they found first that the number of gender lens funds continues to grow significantly, and that's really very notable. So they found 138 funds deploying capital with a gender lens, which was up 59% from actually just 87 the same time last year. They found that gender lens funds are predominantly first-time funds. So 61% of the funds that are investing with a gender lens are in fact first-time funds with a particular thematic focus. They also found that geographic diversity continues to increase. So we've seen an increased focus on Asia, Sub-Saharan Africa and Latin America in the way that these funds are being deployed. That the total capital raised has actually cleared $4.8 billion. And they suggest actually in the report that it may well be higher than this based on the fact that it's more than likely there are some funds that they didn't include or that didn't respond to the survey that they were sent. So that's quite a significant number, and it is in fact more than double from the previous report. They also talk about the fact that gender lens investing is really broadly defined, and so they had 5 categories of different types of gender lens investing which they were looking at. So whether that was women in leadership positions and that was the trigger for an investment, or the fact that the fund managers themselves and investment committees were much more diverse. Or perhaps they were actually they were investing in products and services that have a particular focus on women. So they had a number of different ways in which you could identify as a gender lens investor or a gender lens fund. And then finally, they found that many funds focus on more types of diversity than just gender. So 25% of the funds that they looked at actually state in their investment criteria that they will look for companies that have racial and ethical diversity. And just over 7% look for LGBTQIA diversity as well. So some positive news there. Obviously, needless to say, more to do, but really interesting to see that this kind of new breed of fund is really taking a lead, really, and growing in availability and access. Which made me think about who's actually acting here and has a relationship with the region. I thought you might be interested to know too about the people who I've been keeping an eye on as leaders in this area, related particularly to the west of England. So Alma Angels, a relatively new group, and the reason I mention them is because one of their co-founders is David Fogel, who many of you may know from ADV. Then Ada Ventures, which was set up by Matt Pennycard, who lives locally, and Czech Warner, who also heads up Diversity VC, a great piece of insight and research and activity in this area. Then Inclusive Angels, which has been set up locally by Amy Newton and Alice Stevenson, basically trying to improve diversity in terms of the angel groups and angel activity that are happening locally and support more diverse groups to become angel investors themselves. And then Angels Academ, who've had a long-standing history with the region, particularly around education and support. And then finally, which brings me a delightful segue into our first speakers, also to mention the UKBAA, who've been doing some significant work trying to support and educate a more broad group of investors to engage with angel investing as a practice. So without further ado, that brings me neatly to our first two speakers. So I will invite Jenny and Irene to join me on the stage. I think hopefully they will pop up and you'll be able to see their lovely faces. I know Irene's been having some trouble with her video, so we're going with audio only, a radio effect, one might, for Irene's contribution. But great to have you both with us and to be sharing a little insight into the work that you've been doing around the Creative Scale-Up programme, which has been funded by the West of England Combined Authority. So I was really pleased to invite you both to speak to the QIB community today to share some of the insights that you've gathered through the research you've been doing. But probably makes sense to start with a quick intro. Jenny, would you mind just telling everyone a little bit about who you are and what the work is that you've been doing?
Yes, thank you. And thank you, Bryony, for talking about our work in encouraging women founders and women investors. Yes, so I'm a chief executive of UK Business Angels Association. We're the trade body for angel and early stage investing across the UK. So very much bring together that whole ecosystem around angel investing and really looking how we can support and build investment into great entrepreneurs. So obviously, another reason why I'm here today. And most importantly, we really want to help connect investors with each other to co-invest, but also to connect investors with entrepreneurs. And we do a lot of education. So we're trying to really help make some change and encourage more people to invest, especially women and some people from diverse communities too. And we work very closely with government and indeed with Scale Up Institute as well as one of our key partners in this. So I will stop there because obviously we've got lots to talk about. So thank you.
Perfect, lovely. Irene, do you want to give a quick 101 on the Scale Up Institute and yourself too?
Hi everyone, sorry I can't visibly be seen, but great to be with you all. The Scale Up Institute was founded at the end of 2015 by myself, some entrepreneurs, and also a range of our corporate sector who really wanted to make sure that the UK becomes far better at scaling up businesses than we currently are. We're 13th in the world at growing companies, although third in the world at startups. So we've been working across the private and the public sector at national and regional and local level around how we really put a lens towards these growth businesses who are real drivers of our SME economy. Our SME economy is around 2 trillion and has about 5.7 million businesses in it. Our scale-ups within that SME economy are around 33,000 and they drive 1 trillion, so 50% of that SME economy. And it's why it's so important that we're really focusing in on those scaling businesses at a local and regional level. And all the work, therefore, Bryony, you've been involved in with us, both at Engine Shed and now at TechSpark and Rocket Makers, is all absolutely vital. So delighted to be here today and talking through the particular investment challenges that some of these businesses have.
Great, lovely. Thank you so much. I wonder if, Jenny, would you mind giving us a quick introduction to the work you've been doing with WECA?
Yes, thank you. and obviously, again, this is very much a partnership which has been very, very good to have with Scale Up Institute. But we are really, as Irene mentioned, trying to address that whole scale up challenge in the west of England as one of the key pilot regions, alongside Greater Manchester and the whole Greater Birmingham West Midlands area, to really help scale up industries, businesses, connect to investment and access investment in a way that many of them have not done so to date. And it's a two-pronged issue. One of it is all about how you help those businesses to become investment ready and really help them to know how to really approach investors as scale-up businesses and to put that whole scale-up opportunity to investors. And that's very much the work that our colleagues are doing at the west of England, Nona, who many of you will know, and working together with many key players. And then on the other side of that, and that's why this is very exciting for us, why the project's so important to us is because almost for the first time, they've allowed this whole area of helping to build investment capacity and helping investors to know how to effectively invest in creative industries alongside, because we worked with the assumption that just because you have some great investment ready businesses, investors won't necessarily just turn up and start investing. We know there's a lot more to it than that. And we also know that probably there aren't enough of those investors on the ground in the west of England, and that those who are on the ground at this moment probably do not necessarily regard creative industries as their top focus for their investment. So we're looking to change mindsets, we're looking to educate, we're looking to actually encourage more people to invest, identify those who aren't investing and help them. And so the starting point of our work, which has been really what we want to talk quite a bit about today, is that we've been trying to understand that capacity on the ground. Who is investing? What is their actual overall investment capacity? But also what could be their capacity in creating more investment into creative industries, businesses, and really understanding some of those blocks and barriers that exist in investors' minds. So that's enabled us to go out and talk to what I call the visible organised market here in the west of England. So that's angel groups, and then through them leading us to key investors who they want to introduce us to, who they thought could actually put their perspective about how they invest in creative industries. So we're on a big fact-finding mission, and I hope that we can, also ultimately have some really strong, we are gathering now much stronger understanding of how it all operates on the ground, and also our challenges and how we're going to address those. And then, so the next phase of that activity, which you're now embarking on, is like the whole capacity building, which is very much about education, information, access to, much more detailed market intelligence, meeting people who are investing, and finding people who aren't investing and helping them to invest. So it's been a very exciting program to be part of. But as I said, very experimental to put those two halves of the equation together, which so often we know hasn't happened, and therefore often ends up in frustration when you've got great businesses, built great businesses, still don't get the investors coming on board. So so happy to tell you more, and Irene, my colleague, will also say something.
Great. Yeah, I wonder, Irene, would you be able to illuminate us with some of the findings that you've got in terms of the capacity and insights that you've learned about the West of England community particularly?
Yeah, I think it's quite interesting. I think, the community there and more generally there is a nascent angel market, some very strong angels individually there, and then they're working through a range of angel networks. What's very interesting is you have sort of two homegrown networks there, but you have another 8 that are sort of networks that are based in the surrounding areas. So the one thing that's positive around the West of England is you're not only attracting what you have locally, but you've got interest from the Welsh, from Oxford, from Henley, from a range of different players who work together, some of them through Set Squared, in investing in businesses sitting in the locality. Now, the key thing is, how do you, though, scale up the capability and numbers sitting within those local angel networks as well as the surrounding ones, because on a yearly basis, there's probably around 60 deals done, and there's a level of investment that gets above the 10 million. But there's a real opportunity, and we all know that from what you've just even shown already, Bryony. There is a lot of businesses locally that are growing and have aspirations to grow, and the angel investors are really key to the early stage investment. So how we sort of build out the capacity and build out both it in the local entities as well as those that are and want a cross-border, if you like, investing, how we do that, how we connect up the businesses to the investors is a real key part of our next stage of work. I think the other thing is what do investors look for when they're investing in businesses at the moment? So this is where the scalability and commerciality of any business is going to be really key, which comes back to how do the founders, the team, express what is the marketplace, what is the commercial dynamics of the opportunity, and connect that into the language of an investor. And when you talk specifically about the creative industry sector, I mean, finance isn't a natural language, an investor language. So how we sort of unpick that language dynamic and the interests of the investors is really key. But commerciality, scalability, really, really important. And that does lead you into, therefore, real interest in the gaming industry, in digital media, in advertising, everything that has that tech-enabled type structure. So those are some of the emerging findings. I think to your other point, and maybe just picking up the people point, what's very clear is, as we might inherently expect, but it's very true, the angel community bring much more than just money when they seek to invest in a business. They are trying to bring in as well, and are bringing in connections. They're bringing in guidance and mentorship. They're really seeking to be helpful to the business owners and leaders as they seek to grow. And it's not just about the finance element. And so I think that comes across very strongly from the community that you have.
Yeah, no, that's really good to hear. Really interesting. I think particularly, so some of the data I'll share a little later in the event. Our most prevalent investor in the region is in fact Cedars, who have 32 by number of deals, not by size of deal, I should add, but by number of deals. They have 32 deals that are happening locally, and I do find myself reflecting on, and Crowdcube's up there as well, reflecting on how much that has both a positive and a more challenging impact on the angel kind of activity locally. Well,
I think one of the things is that obviously Cedars and Crowdcube, very good platforms, and they've got a range of individual investors in them as well. But you've also got a very strong group of investors that want to do that and base that in a local environment and be physically there in the local environment. Clearly, COVID has led to an opportunity to open up that technology. And I think it's how you create connectivity between the business and the investors is going to be clearly a big focus. What is very clear overall is it's still quite a nascent, embryonic environment, and there's a lot of opportunity. So how we get this right, working together, is going to be really important.
Yeah, absolutely. And so what's the game plan? So Jenny, you mentioned in your intro that the kind of next stage of work, once we've got a better sense of the kind of capacity that's here, is to really think about how do we both train up potential new angel investors, and also to help those who are already here think more about the creative industries as an opportunity.
Yes, thank you. So yes, I mean, really building on all those insights that Irene mentioned about, how investors are approaching this, has really now enabling us to kind of build, I'm calling it a toolkit at the moment, and a lot of it will be online as well for the time being, but so that we can actually first of all, introduce investors to a much deeper understanding of the creative industries through, and I'm calling it education, but I won't probably say that to the angels, because I know as an investor, you don't like to become educated, but what you do like to be is really informed about the opportunities. And how could you do this effectively if up to now you've not been approaching creative industries because you don't believe it's an opportunity, you don't believe there's growth in the market, you don't believe there's real investment opportunities or returns. So what we're trying to do is, to a degree, debunk the myths around the sector, address the barriers of, why I won't invest in the sector. And we've got that pretty loud and clear as well now. And really by doing this in three ways. One is, as I said, first of all, a sort of deep dive into creative industries and the key subset sectors where we think they're most likely to want to look for investment opportunities. Things as already mentioned by Irene. So it's gaming, it's media, we've got music, but much more tech, all the tech enabled. So we're going to address that. We will be talking to investors who are already investing. So there'll be great video content about how investors are investing. How do you invest? How do they get returns? How do they evaluate deals? How do they do due diligence? And what are the likely returns, so that you can get a feel for how you would invest. Secondly, of course, needing to have regular understanding about the sector. So the kind of things you're doing now, real market intelligence about the investing, obviously opportunities generally, but obviously specifically about, industry relevant information that they'll be able to attend, podcasts, all kinds of things that they can do to build up confidence and knowledge, but also helping them to identify the sectors, the subsectors they would be most likely to want to invest in. Secondly, of course, we need lead angels. And the biggest challenge in this whole space, and it is generally for the angel communities I've been working with for many years, is finding those industry leaders who actually really understand the market and the industry. And to a degree, encouraging them to invest, because it won't necessarily be the industry leaders who at this moment are angel investing. So again, if we looked at the networks and groups, most of them have said we really do need more leaders in this space to help build and grow confidence among other investors. So we'll be looking to recruit people from industry and recruiting people we think could have that kind of Pied Piper effect, bring others on board as well. And then obviously a big part of this now is helping them to have access to potential investment opportunities. So working with our colleagues on the other end of that, working with our colleagues who are doing the business support, there'll be more interaction between the investors and the businesses coming through the program. But obviously, much more generally, we want to expose investors to a wider set of opportunities. So again, the kind of environment that you're creating here, Brian, is very important to make sure that we have those links. And if I were to say where I think the biggest opportunities will be to actually start to build sector-specific angel syndicates and groups. So, we'll help to populate the existing ones, but build within them, and also in addition, groups that can invest and groups that want to invest. So that's very much the approach. And it's not a silver bullet, it's not a magic bullet here, as you can tell. This will be long term. But what we want to do is change mindsets, create opportunities, but create a much better understanding and a real understanding of how to invest effectively. If you're going to do it, we want to make sure this really works.
The other bit, Jenny, I'd add to that is just obviously the research we've done is feeding in very topically into government in relation to a comprehensive review and the upcoming budget. So it's giving us a lot of evidence around what's going to be important and what is important to the angel investors as well, around the role of EIS, SEIS, the role of the British Business Bank, the role of Innovate UK, and what can be done to further co-invest, because most transactions are co-investment. What can be further done with those entities to support what's happening in the west of England? So that's clearly a big aspect as well of what we're feeding into.
It's really interesting, and whatever we can do to support with that, I think as really happy to collaborate and support the work, because I think there's a huge amount of value in getting the ear of government, which is something which is sometimes harder to do from the regions than it is from a London centre. It makes me think about our Silicon Gorge pitch competition, which we just closed our autumn edition applications, and I think I'm not saying too much to tell you that we had more applications this time around than we ever have done before. And actually, I'd suggest that maybe a few of them were from the creative industries. There were a few really interesting companies around podcasting, particularly, who are suggesting that they want to create an audio centre of excellence in the region, and that's something that's being spoken about quite widely. To me, what's interesting is then to look as we go through the process of shortlisting and getting to the final 10 or 12 is how many of those are truly investment ready and are in a position to be pitching in front of a room full of investors. So that's going to be really interesting for us to observe this time around, and then with the next Silicon Gorge early in next year in March as well. So yeah, really excited to.
That's great that you're seeing so many great companies out there. And again, I think that critical mass is very helpful for investors, you know, to be able to see when you've chosen when you've got a curated critical mass like that, that really helps investors to understand, gosh, there are some real nuggets here, there's some real gems, and this makes me really want to know more about that. So I think that, you know, in parallel is very, very, very helpful indeed. And as Irene said, the whole point about the policy side is we are in a very exciting moment, really, with government realizing they need to do more, you know, in the whole space to support entrepreneurs and support investment into those entrepreneurs. So Irene, as well, has been doing a fantastic job in interfacing with government, and I think we've got a real opportunity here to make something happen. I say that, I almost want to add on that, finally, make something happen.
Yes, I hear you. So I'm just going to pick up Ben's question very quickly, if you wouldn't mind, Irene, giving us a sense of what you've seen that's different between the three regions that you've been working across. So obviously the Creative Scale Up programme obviously extends to Manchester and Birmingham for those of us on the inside. So yes, whether there's any particular differences, both good and bad, that you've seen in comparing what we do here elsewhere.
Well, let's just focus on the investor side of that response, Bryony. I mean, I think what's really interesting, I mean, you certainly have the most interest from surrounding investors. So your connectivity, whether it be to the south in east in Oxford and Cambridge, or Wales as a completely different investment area, that is really clear. You have the most number of outside the region investors who are interested in the region. So that's very positive. If you then look at the scale of investment and numbers of and scale of, some of the scale locally is smaller than what you see in Greater Manchester or the Midlands. So I think there's a real opportunity to really scale up what you are currently doing with more investor power, if you like, in terms of leveraging the community that is local to you, and indeed all the stakeholders. You know, the ecosystem is very vibrant, whether it's the banks, the advisory, the entrepreneurs. You just said it was Silicon Gorge. I mean, look at the sort of vibrancy of the entrepreneurship. I think really critical is how we're now going to collectively and yourselves harness that community in unleashing those individuals that are there that could be angel investors, but need a little bit maybe more of encouragement for that, which is why what we're doing next with you and others locally is going to be really important on what it is to be an angel and what the opportunity is. And equally with the creative sector, I think we've got to encourage those that are really knowledgeable about the sector to think about being angels and engaging with those that have the real investor knowledge and pairing that up better, because the angels want people that know the sector, and those in the sector probably don't think they know enough about investment. So how do we match that up in a better way to really allow the entrepreneurs to get the investment they need?
Great, absolutely. I know I'm running a little over time, and I know you've both got other events to be at. So I will. On that note, say thank you ever so much for sharing some insights with us this afternoon. And I'll look forward to continuing the conversation, not least through the blog that will go out hopefully in the next few days, but also through our continuous conversations in the future. So thanks so much.
Thanks so much, Bryony, and thanks everybody for joining.
Yeah, thanks for having us. Great.
Look forward to working with you further. Bye-bye.
Thanks.
Thank you. Bye.
Bye-bye.
So Charles, that is your cue, I think, hopefully to appear on stage magically. Marvellous. So thanks so much, and apologies that I'm running just a few minutes behind. I get so wrapped up in conversation. It serves me right for not forcing them to do a lightning talk instead, which is what I've asked you to do this afternoon. And I'm really grateful to you for joining us from your home in our region and from your role, which is, of course, far more globally focused than your location would suggest, perhaps. I think there's lots of people doing really interesting work from around Bath and Bristol and the surrounds in West of England. So, Charles, I can tell everyone that you are the co-founder, partner and global client lead at SI Partners, and that I've asked you really to share some reflections and insights around our theme of people-powered investment, and to give people a sense of who you are and what you're up to as well, and what you feel you can bring to the local ecosystem. So I will hand the mic over to you.
Great, thanks, Bryony, and thanks to Irene and Jenny, who sort of give a more of a organisational perspective. So mine's going to be slightly more personal, if that makes sense, because I am an angel and an advisor to creative and technology businesses. So it's going to be slightly different, if that's okay.
Perfect.
A bit of background. So I've been in creative services and related technologies for, well, it's the fourth decade, so over 35 years. So I've got lots of experience just doing creative stuff, which is fantastic. Originally in advertising, I worked at Saatchi's for 10 years in the 80s to mid-90s. Got involved in technology and set up something called Saatchi Interactive in 1993. That was one of the first digital agencies. We didn't have the word digital back then. And we built some of the first websites in the UK, commercial websites in the early 90s. Left that eventually and set up one of the first e-commerce businesses, internet business called Pets Pajamas. We were equivalent of Pets.com in Europe. We raised lots of money from rather unpleasant American venture capitalists. And we built that business, and then we became a casualty of the dot-com saga. And from that experience, I set up SI Partners, which is the company you mentioned. And we are a growth consultancy and M&A practice. And we specialize and passionate about all things creative and technology. And we have a team of 30, and that's split across London, Singapore, and Hong Kong. And it was in New York because I used to commute to New York, but I've fallen back in love with my Somerset garden, so I won't be doing that any time quickly. Separately to SI Partners, I'm an investor and advisor, again, to technology companies, particularly in the UK, as well as social enterprise businesses. So I'm a founding investor and chairman of a technology company called Dice. And Dice is a global live streaming and live events ticketing business for the music industry. Also chairman of Go In Store, which is a technology to enable you via video to connect from your e-commerce to a salesperson in a dark store in an actual store. As you can imagine, COVID has been somewhat transformational for that as a technology, so watch that space. Also founding investor in Green Man Gaming, which is a global e-commerce platform for gamers in terms of buying games and accessing them. And lastly, perhaps more local, well, it is local, Agile Housing, which is a social interest, which is a housing solution to enable us to start tackling the rather huge crisis we have in housing. So if anyone's interested in housing in Bristol, in the Bristol area, please come and talk to me on that. What we notice in that is, though, a lot of the investments are founding. In other words, I did it right from day one. And so what I wanted to do is just give you perspective on that and bring in the perspective from SI Partners as well, just to give people a particular sort of personal perspective. With creatives, it's a bit of a mantra and it's a bit obvious, but I'll keep saying it. It's all about the people. It has to be, because you're dealing with people who are creative by their nature and their ability. And I always say to people, you need to be brilliant at something. And the more brilliant you are, perhaps the harder to manage you might be, but the more likely to be successful. And it's all about the passion. So when I look at businesses to invest in and advise, I measure it by their passion, what they're dealing with. But at the same time, you do need to be clear about, there is a division between talent-based businesses, which tend to be purely the creative one, and then technology businesses. So I thought I'd just split those two up and give you a couple of insights on each one. On creative services, where you just have people who are advising, generating advertising or film or videos or whatever it might be, you don't really need investment, if the truth be known, because you should be able to grow by being brilliant at what you do, charging a lot of money for it, getting paid, and then using your balance sheet to invest in more and more people. So by all means, exchange some of your hard-earned equity if you're hiring senior people in terms of granting options. but most of the creative businesses I'm involved in rarely raise capital, because if you are good at what you do, you don't really need to raise capital to grow a business as such. Some people do it. I have a few clients who do it just because they want to go particularly fast, which also sort of, there's an argument to that as well. When they do it, friends and family tend to be the normal route, just because it's people they know, it's quite easy to do. We all know about the tax efficient schemes of super EIS and EIS, so there's sometimes tax efficient ways of doing that. But I'm also very wary when people do friends and family, for the simple reasons they're friends and family. And you're mixing things like money with friends and family, which perhaps you shouldn't do. So I always encourage people to place their valuations fairly. In other words, don't be too aggressive on the valuation. But at the same time, if you're brilliantly successful, have the option to buy back half of the stake after 3 years. So it's just a way of not trying to get the value too high to start with, which might be a tad embarrassing, but at the same time, giving an opportunity to buy back, say, half of their stake at, say, a multiple 3 times what they invested a few years later. So that sort of balances out that kind of arrangement. Of course, for technology companies, it's completely different because you have to build something and therefore you need capital. And that's probably where I spend most of my time now. Crudely, a good accountant will get you a long way. By all means, go and find one. Also, don't underestimate, and you've touched on this, I know, in a lot of your other stuff, Bryony, which is around the grants, the government grants and loans. So a number of our businesses have applied and been very successful in getting the first 100, 200, 300,000 pounds through grants and other such things like that. So that seems to work very well. And on seed investing and perhaps Series 1, and excuse the language, the venture capital community have ridiculous language around Series 1, 2, and 3, which I think is, it's on video, so I won't swear, nonsense. So just be wary of the language around that, because I don't think it's very helpful at all. The message I tend, or the strategy I tend to use with most of the businesses I'm involved in, is don't try to raise too much in big steps. It's much better to raise money continuously and in lots of little steps. That way you will be able to evaluate the situations as it changes. You won't have to necessarily give too much away too quickly. And I know it sounds a bit funny, but I'll say it anyway. It also stops you spending the money too quickly. Quite often when I see people raise 5 or 10 million quid off the bat, as it were, they then spend it, then need more money, and then struggle to raise it because they've already raised, as it were, what they deserve. So there are some challenges around that as well. I think if you're doing it for the first time, I think having good advisors, people who will come recommended to you, are really, really important, because it is a new exercise. I'm a mentor, which means I offer my services for free through something which Bryony's doing. So there's lots of people out there which will give advice for free. Not that I'm trying to take anything away from the hardworking professionals, but you know, wherever possible, people should network, ask their friends who do they know, who they don't, who provide that kind of insight. So that's sort of two ways: the creative guys who don't really need capital as such, and technologists, in my view, who definitely need to do. And there's different ways of approaching that. And I thought I'd just finish on what's really happening at the moment, because it's different out there. So I've got 3 or 4 points on that. The first one is there's actually quite a lot of government money around in all these wonderful loans, which we've all managed to get. I have to be honest, some of my clients have converted their personal loans into single loans, but it's just free money. People have to be careful how they spend that money, because it's not free, although lots of people sort of are starting to think that it is free. The investor community, I think at the moment, are weary and are concerned about what 21 is going to bring. That said, though, passionate people with contemporary ideas, with some traction, in other words, they're able to demonstrate that some of the assumptions in their business model are somewhat proven, will still get funded. But you just perhaps need to give yourself a bit of a longer time to do that. Personally, I never look at investment proposals which their first proposition is you get your EIS tax relief back. It's not about the business, it's about tax relief. So personally, I don't go anywhere near those. I find them quite irritating because it's not about the people and the idea. So that's just my point of view, which people may or may not agree with. And the last point is, those people who will win are just the really good people at hustling. They're good at networking. They turn up, they chat to everyone, they take every meeting, they take every phone call, and they hustle, as my American clients would say. And that's really just my perspective as it is at the moment, Bryony. I'm sure there might be some questions.
Absolutely. Well, I have just invited people to share them should they want to ask anything. Really interesting to hear that perspective. Thank you, Charles. Not least the kind of global question. So I'm seeing locally, we're seeing a huge, I would say, uptick in the number of early stage companies, particularly in the creative industries, who are looking for investment, and they aren't necessarily tech based. So I mentioned earlier podcasting, for example. So there's a few companies that have popped up, and they may well have been around for a long time, but they've suddenly popped up in the investment scene. And so what do you mentioned mentoring, what's the kind of support? How can we help them to really move forwards if their main focus, or if they think they need the capital, then how do you convince them otherwise?
Well, I'll happily have a cup of tea with them. I think the truth is, do they really need the capital? Now, the issue is something like podcasting, which is of the moment. There is therefore a land grab. In other words, who can get enough momentum fast enough to then sell their businesses to one of the bigger players? So that's probably an argument which people are putting on the table. I need capital because I need to go and grab it quickly.
Yeah.
Danger is, how are they going to spend that money? So I tend to always say you need to look at it from a revenue opportunity rather than a cost opportunity, if that makes sense. So look at where the revenues are going to come from, and then that determines more about what you can afford to both invest, but also what you can afford to spend. Because too often I see people with brilliant ideas, they raise the money, they spend it too quickly, and then they run out of money having built a team of 20 or something, and then you're caught. You're left, the tide goes out, and you're not able to then take another go at it, which is a real shame, because usually inside the businesses there are some great people and great ideas, but they need to moderate them a bit more before they actually are successful in market.
Yeah. And do you see that more in certain areas of the world, out of interest?
Do I see it in more certain partners? The
kind of data the Scale Up Institute throws around is that there's 3 times more capital available in the States. And so hence a lot of companies get huge investments early, but interested on your perspective.
I don't live in the States, so I can't really give you enough indication on that to answer it correctly. What I would say is, when I raised my first money in 1997, there was a couple of venture capital companies, and one called 3i, which had an office in every city, and that was all you went to. I mean, we actually did enter a competition called the 3i Sunday Times 3i Business Catapult competition, and we won it, which just goes to show you should do all competitions on the back of envelopes, kind of thing. But nowadays, as an investor, there are many sources of funding in the UK, so I wouldn't worry about the comparison to other markets, because I think there's plenty of money in the UK market to do that. And the whole attitude, I mean, Irene and Jenny illustrate the point that there's, good organizations to help people. There is a debate for some of the tech firms I work with, at what point do they take American VC money? Because there is an attitude growing that why can't we fund things in the UK? Why do we always have to go and get the big guys from Silicon Valley, etc., to scale our businesses? And one of the business I deal with is we have that very debate at the moment. And it's a shame that we tend to flip to the West Coast to get the real scale-up money, because they are more aggressive on price and they're more aggressive in terms of picking the winners, and we tend to be a bit more conservative. So I think there's a lot we could do in our venture capital market to try and address that, because it often means then the talent has to go and move to America because they want the headquarters in America, which is a crying shame. Yeah,
absolutely. One of our favourite anecdotes locally is some investors who have, in London, in fact, who have asked where on the tube map you might find Bristol. So, yes, I hear you.
Everyone's come here. If they didn't get what we're about, I think we're incredibly lucky to live in Bristol. I was born here, so I'm through and through Bristol, but I find it a brilliantly self-contained city-state, and I think we should actually go for independence, because I think we'd be very successful at it.
Yeah, absolutely. I'm going to ask you one last question, if you don't mind, which picks up on something that Jenny was saying about lead angels being a particular challenge for us in the UK. So it's something that she's spoken about. I've been working with Jenny since I was at Engine Shed maybe 3 years ago now. And it's something that she's talked about since then. And it is in fact that, you know, and I know through my mum's social circle that there's a huge number of very successful people living in the outskirts of Bath and the surrounding region in Somerset. It's a lovely place and people gravitate here. So how do we support them to find space to do this kind of work? I think there might need to be some kind of incentive, because I think the kind of due diligence and the burden of being a lead angel is probably significant, but I'm not in a position to be asking myself that question. So I thought I'd see if you had any thoughts.
Sure. I mean, the truth known is, if they're successful entrepreneurs, they're probably not very good investors. And I mean that in the nicest possible way, because they're not trained in how to do it. So, for example, you know, I've been investing in all for decades. I have two mantras, which is I either know the people really well, or I deeply understand the idea. So, therefore, my due diligence is quite low because I either deeply understand the idea, in which case I can see the answer, or I trust the people and I'm backing them. And by the way, the best returns I've had is backing the same people multiple times. In other words, they fail the first 2 times, but it's the third time that they're successful. So as an angel, if you want to call me that, I actually, it sounds terrible, but I don't need to do due diligence. Now, the issue is the angel clubs, they provide that due diligence for you, but I even challenge some of those clubs because I don't know if they actually have the people in those clubs to make the assessment. So I don't think I have the answer. I think it's a really good question. I suppose if I said, you know, if someone said to me, Charles, would you be a lead angel? I'd probably start worrying about it and go, crikey, what does that mean? Do I take on a responsibility? So perhaps there's another party which needs to be created to do this. I mean, you know, if you took my main business, SI Partners, you could argue that they could be fulfilling some of that. So I suppose Irene and Jenny need to think about, rather than putting the onus on an individual, because I think that would be hard to do, who else in the ecosystem could provide affordable due diligence, if that makes sense, as the clubs do, to do that. Now, and of course, you know, when I do due diligence, you know, I have accountants who I trust, I have lawyers who I trust, I have teams and stuff like that. I have never formalized it, but it doesn't mean to say it couldn't be formalized in some way. But I think that it's wrong to think the entrepreneur should be the lead investor, because you're putting him or her into a place where they aren't, it's not something they're necessarily skilled at doing.
Yeah, absolutely. Echo what Zara's just said. I see a new business idea right there. Definitely the case. Not least because, you know, I think a lot of these, the angels who are around are being consumed into some of the platforms. So Seeders and Crowdcube being the two that I've mentioned earlier, but there's a huge number of others, aren't there?
If I can build on that, if you've had someone put a suggestion up. So when we raise, in SI Partners, when we raise capital from private equity firms, and we're trying to do it from people around the world, and it's a fast-growing business, the company invests in something called pre-due diligence. In other words, they go and get a recognised outside party to do the due diligence which the private equity people would do in the event they were interested. That enables us and our client to travel at speed because we have all the data and it's, as it were, audited by the other party. It also means we can go quite quickly to final offers and we're more likely to be successful. So what you could do, perhaps, someone could build a product which is affordable, if that is possible, where you offer as it were, the business has had its due diligence done already, perhaps.
Yeah. It's really, really interesting proposition, actually, and makes me think of a local startup around house buying and estate agency who are trying to offer the same service. So get us all sorted so that we're ready to move forward with a house sale. But I think all the more relevant in this sector as we're trying to unlock capital and get to a point where more companies are funded, particularly at this time. But yeah, really, really interesting. Sounds like Zara might be getting in touch on LinkedIn to further that conversation. So thank you. Without further ado, I will say a huge thank you, Charles. I'm afraid round of applause are a bit kind of echoey when it's only me, but really grateful to you for lending some time and some thoughts to share with the community today. Really great to get it. So thank you.
Thanks, Bryony. Take care.